Take a look at shares of State Street falling more than 8%. The money manager announcing a deal to buy financial data firm Charles River Development for $2.6 billion. State Street says it is suspending $950 million worth of share repurchases and issuing fresh equity to help finance that deal. The firm also out with mixed second quarter results. Joining us now in a first on CNBC interview is State Street's incoming CEO, Ron O'Hanley. Ron, thanks for joining us.
Thank you, Sarah.
Let's start off with the stock slide. Seems like there's some skepticism around the deal, or at least how you intend to pay for it by canceling that share buyback plan. What are you telling investors today?
Well, I think investors always want to take some time to digest a deal and decide whether or not it fits within why they bought our stock, why they own our stock. So it's not unexpected that you would see some kind of a stock slide. So, investors need to understand our rationale, which we believe is quite compelling.
Talk us through that, especially on the pricing, which it seems like a lot of analysts were asking about on your call.
Yeah, well, if you think about what's going on, our core client base is other asset managers and large asset owners like sovereign wealth funds. And what they're facing is a series of challenges. Firstly, how do they deliver better investment performance? How do they lower their costs? How do they simplify their operation? So we, as an asset servicer, spend a lot of time with them on their back office and their middle office. This helps us provide them also front office solutions and also helps them integrate their front, back, and middle office. So we're simplifying their own operation, lowering their costs, and most importantly, giving them access to data in a way that they can inject it back into their own investment process. So it's a highly flexible system that utilizes either our capabilities or the capabilities of others, but in a seamless way.
It sounds like it's about technology. Is that what you're saying, about automating the process better for your clients?
Of course it is. In fact, much of what we do is about technology. What we do, so for example, we're the largest player in the so-called middle office business. And what we do is we take lots of manual operations off the hands of the investment manager and put some technology and systems in them so that we can streamline, make their reconciliations better, make their reporting faster, and most importantly, lower their costs. So it's very much about technology and consistent with our overall technology strategy. So if you
Sir,
think about where the...
Go ahead. Forgive me. Finish your thoughts, sir. Thank you.
No, if you think about what's the most important thing to an investment manager today, it's data and information in a usable form. It's not so much the quantity of data, but the quality of data and the usability of it and the speed with which it can be brought to them. So much of our strategy for years now has been about how do we bring that data to clients, enable them to use their own data well, and also to aggregate other data. And this acquisition of Charles River helps us advance that strategy, move it forward, add more capabilities, but it really is about this idea of good data, good information, helping the investment decision and lowering costs.
Yeah. Sir, how does the market look to you these days?
So, I mean, the market, the underlying fundamentals, I think, remain quite strong. You still have, particularly in the U.S., a growing economy, a strengthening economy. So from a pure economic perspective, the market looks good, and that's what the market sees. There's obviously a lot of uncertainty. The biggest one probably is around trade, and whether the tariff actions and the trade actions being taken are going to result in some kind of a long-term protracted price and trade war that will, of course, create damage to the economy. So I would describe strong fundamentals, but with a lot of uncertainty, mostly fueled by trade.
How do you feel about the president publicly criticizing the Federal Reserve's policy of tightening and the strong dollar?
Well, listen, this country has thrived on an independent Federal Reserve for a long time. And you only have to look at how well the U.S. navigated through the last market crash to see that. So the Fed has made the decision, given the strengthening of the economy that it's time to raise interest rates. And I think it's good for all of us to just listen to the Fed. We should, in some ways, be celebrating that interest rate rise because it reflects the strength of the economy.
And then finally, is the uncertainty that you mentioned the reason you're seeing the slowdown in the ETF business? Looks like no new investor cash in Q2 into your global ETFs.
You certainly did see in the second quarter, particularly amongst institutions, and our ETF buyers tend to be institutions as opposed to individuals, you saw the so-called risk-off trade. And I think it was money managers and investors saying, we're going to put money on the sidelines, we're going to go into low-risk investments, and let's just wait and see what happens because of the uncertainty that we see out there.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.